Oil had quite the move today. I'm gonna look at what we can expect in oil into the Thanksgiving holiday. Before we do that, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. If you're new here, I'm Hema Reddy, and I use price action, momentum, and market timing to help boost my trading, that of my trading tribe. Now, here we have the oil continuous contract chart. Okay, so it's linking each active month with the next, and there are 12 contracts of oil futures each year. So right now, it's focusing on the action from the January 2023 contract, but it will then roll to February, March, and so on. Now, what you have here are these vertical lines, and the ones in orange are past forecasts I had for oil. Times when I expected oil to make a significant move based on the price action leading into it. This purple vertical line is the most recent forecast I had that I shared in my Outlook annual report. And you can see that I had a forecast for oil to make a significant move into November 4th, okay? Now I made that call on, as you can see, October 14th, the gray vertical line. And look what happened. We had a key high in oil just one trading day later on November 7th. Pretty awesome. So since then, what's unfolded? Well, you can see that there are levels on the chart that sort of look kind of wiggled out of place. That's because the contract rolled, and therefore they are not anchored to the most precise point based on the new contract. So we're going to move those around to give us more accuracy of where to look for support and resistance in oil next. Now, before we do that with the price action, I want to take your eyeballs down to the RSI Power Zones indicator. This is my favorite momentum indicator. And what this is showing us is that we are back at some recent oversold levels that have been presenting on oil, meaning it's more likely that price will trade higher from here than lower. So zooming in on the recent action, let's look at what is ahead for oil. So I've just nudged into place this line that was floating around to the 74.73 low. What I'm also going to do is bring in more recent resistance, 89.51, 93.15. And there's also one more level at 85.59. All right. So my expectation is that oil will continue to rebound into this 85.59 to 89.51 area again on the January contract, which here is plotted as continuous contract chart. I think it's much more likely that oil will return back towards the top of the trading range, this $93, $95 area, as opposed to breaking lower. Now, I don't have a crystal ball, so if it does break lower instead of breaking higher, then the support that I would watch and monitor is actually back from the last major advance. And that level is here at 67.67, the January 24th low. If it continues lower, I'd watch the 63.18 low and then continue from there. So I've given you 3 supports and 3 resistance levels to monitor in oil in the short term. Again, based on today's volatile move, which is likely setting us up for higher prices in oil. Catch you on the inside.